Spectrum TV, broadening your horizon.
Good morning and welcome to this wonderful day to talk business. My name is Blyden Okem and it's Spectrum TV and Business 360. In today's Business 360, we'll look at the key features from Europe, Asia to Americas and Oceania. La Nina finally ends after 3 years, signaling shifts in weather worldwide. After 3 straight winters, the weather rolling La Nina has come to an end. A cooling of waters in the equatorial Pacific has given way to more normal temperatures, signaling an end to phenomenon that brought droughts to California and South America and floods to Australia. The U.S. Climate Prediction Center said on Thursday in its final La Nina advisory. They said, La Nina is over. It is typical that the ocean goes first and then the atmosphere follows behind. With its end, the Pacific influence on global weather will pause. Let's look at the state of things in Japan. The Japanese parliament confirmed economist Gazawa as the next governor of the Bank of Japan today to replace Haruhiko Kuroda, who led the capital, the central bank, and the apex bank for a decade. In China, China's Xi wins unanimous votes for the 3rd term as president. China's parliament elects Han Zheng as China's vice president, according to state media. Meanwhile, China's CSI 300 index passed a steady loss as Xi is elected for the 3rd term. Well, seems like negative outlook from a Chinese point of view, as the president is inclined to be elected for 3rd term, the index falls. We move to Europe and Russia. Russia still conducted nearly half of all trade late last year in the currencies of its adversaries that imposed sanctions over the Kremlin invasion of Ukraine, even as the yuan and the ruble made deep inroads into the settlement of transactions. Payments for exports using what the Bank of Russia calls toxic currencies, primarily US dollars and euros, accounted for 48% of a total at the end of 2022, down from 87% at the start of the year. The yuan shares increased to 34% from 0.5%, and the ruble made up 16%, according to the report by the central bank on Thursday. It is time to come back home, looking at Nigeria's crude oil production and output. Nigeria's crude oil output rose to 1.3 million barrels per day in February, the highest in 13 months. The Nigerian Upstream Petroleum Regulatory Commission disclosed this in its latest oil production report. Data from the agency revealed that the country's production increased by 39% from 937,766 barrels per day in September, when the country was battling with oil thefts. On a monthly basis, Nigeria's crude oil output rose by 48,154 barrels per day from 1.26 million barrels per day in January to 1.3 million barrels per day the following month. Still from a Nigerian perspective, more deposit money banks are dispensing old 1,000 naira and 500 naira notes to their customers. According to reports, Polaris Bank and First Bank had started to pay old 1,000 naira and 500 naira notes to their customers. This came about 3 days after Guarantee Trust Bank PLC, Zenith Bank PLC, and Sterling Bank started dispensing the old notes. Meanwhile, many customers were shocked on Thursday after some deposit money banks declared that they would not accept the old bills from their customers. Many of the banks gave their customers conditions to be fulfilled before they would allow the old notes to be deposited by their clients. This created confusion among customers who also complained that the old notes were being rejected by traders filling stations, transporters, and other businesses is a concern around the country at the moment. It would be a good time to move to global economy to see the outlines and economic indices around the world. On March 9, 2023, Senior Deputy Governor of the Bank of Canada, Caroline Rogers, spoke before the Manitoba Chambers of Commerce. According to Rogers, the Apex Bank will need to see more evidence to fully assess whether monetary policy is restrictive enough to return inflation. That Canadian inflation is still well above target. The Bank of Canada is still worried about upside risks. Let's hear from Caroline Rogers.
And I do plan to spend some time discussing the bank's decision yesterday to hold interest rates steady and letting you in on our thinking leading up to that decision. But let's start now by setting the scene. I'll begin, of course, with inflation, because that is what we target, and as we just heard, it is the thing on everyone's mind. And we can all agree inflation is still too high. It's come down a bit, but at 5.9%, we have a long way to go to get back to the 2% target. Our monetary policy is working to do just that. Increases in our policy interest rate are starting to slow demand, giving supply time to catch up and taking some of the pressure off of prices. We know, though, that adjusting to higher interest rates has been hard for many Canadians. Our policy interest rate is at levels not seen for 15 years. We also know that many Canadians are asking how exactly making their mortgages more expensive while they're still dealing with higher grocery bills will eventually lower inflation and make their lives easier.
Rogers speaking at the gathering of commerce. Let's move to the US. The British economy expanded 0.3% month-on-month in January, partially bouncing back from a 0.5% contraction in December, when strikes halted activity and beat forecast of a 0.1% rise. The services sector was the main driver of growth, led by education, while production fell in industry and construction. Considering the 3 months of January, or rather the 3 months to January, the GDP was flat. Looking at Nigeria's trade surplus. Nigeria's trade surplus ballooned to 1.117 trillion naira in December of 2022, from 84 billion naira in the same month of the previous year. It was the largest monthly trade surplus since December 2012, as exports jumped 36.5% to a 6-month high of 2.353 trillion naira, mainly boosted by shipments of manufactured products at 487.5%, solid minerals 92.4%, agricultural goods 42.1%, and crude oil 35.1%. Conversely, imports tumbled 24.7% to a 2-year low of 1.236 trillion naira, as reduced purchases of agricultural goods was at a negative 53.5%, manufactured products a negative 24.3%, and raw materials a negative 3.3% outweighed increases in those of other products, which were positive, a positive 22.7%, and solid minerals, a positive 5.7%. Considering the full year of 2022, the country's trade balance shifted to a surplus of 1.206 trillion naira from a deficit of 1.936 trillion naira a year ago, as exports soared 41.7% to 26.797 trillion naira, while import rose at a slower 22.8% to 25.59 trillion naira. It would be a good time to look at the chart indicating balance of trade in Nigeria. According to the chart, as of January 2022, it was a slowdown in trade, not quite high, even had a deficit mid early part of the quarter, as at April it went back up slightly close to the 5 trillion mark, and further went downward as of July 2022, but currently had gone past the 1 trillion to 1.114 trillion naira. As at April, the mark wasn't 5 trillion, it was at 50 billion naira. Let's look at the commodity market. Nigeria's crude oil sale rose by 46.41% to push Nigeria's total exports to 26.79 trillion naira in 2022. This is as total trade rose by 31.79% from 39.75 trillion naira in 2021 to 52.39 trillion naira in 2022. In 2022, crude oil sales totaled 21.09 trillion naira, a 46.41% increase from 14.41 trillion naira in 2021. In 2022, crude oil accounted for 78.74% of total exports according to the National Bureau of Statistics data. It would be a good time to look at the energy market, what crude in the US is in terms of its price, and Nigeria's price benchmark, the Brent crude oil. The energy market this morning has shown further negativity against yesterday's trade. Market is dropping this morning for US crude, the WTI crude oil, by 0.5 points decline, a negative 0.66% decline. Current price $75.2 per barrel. For Brent, which is Nigeria's price benchmark, is $81 per barrel, downward by 0.5 points. Natural gas is downward, gasoline downward this morning, heating oil slightly downward this morning. Let's look at the metal market equally, what the metals are saying this morning. Gold is a little here, a little there, moving upward by 0.6 points. Current price $1,831 per ounce. For silver, slightly downward, a little here, a little there, $20 per ounce. Copper is slightly downward this morning, but no significant difference. For steel, it's upward by 64 points, a 1.5% appreciation. Current price 4,319 Chinese yuan per ton. Iron ore, slightly upward this morning. Agricultural market would be next. The perspective of the agricultural market, the price of soybeans as well as wheat. Soybeans slightly downward this morning by 4.5 points, a negative 0.3% decline. Current price $1,515 per bushel. Wheat $655 per bushel, upward by 1.98 points, a 0.3% appreciation. The market is a little here, a little there, but palm oil is downward this morning by 97 points, a negative 2.31% decline. Current price for palm oil 4,108 Malaysian ringgit per ton. It would be a good time to look at the foreign exchange market and the peculiarity of events in the foreign exchange market. We'll begin with Oando senior market analyst Craig Elam, who discusses about the Euro USD. He says, "We await some huge economic data releases and the Fed rate decision in 2 weeks." Let's hear from Craig Elam.
Economy is still running quite hot, the labour market particularly so. And a lot of the sentiment at the time was that we are seeing strong data because of unseasonably warm weather. While the weather in February was a bit more mixed, the economic data that we get for February over the course of the next couple of weeks will tell us whether this is a trend that is forming of red hot data, meaning that the Fed has to do that much more in order to try and cool the economy and get a grip of inflation, or if the January data was simply a blip and the previous trend has resumed. Now, that actually begins on Friday with the US jobs report, but over the next couple of weeks, we'll also get retail sales data and inflation data, as well as much more, which means that when the Fed meets in 2 weeks' time, it'll have a much better understanding of how 2023 has started beyond just that one set of January economic figures. At the same time, we've got the European Central Bank meeting next week, and that is expected to raise rates by 50 basis points, which is also expected to do so again at the following meeting, and then 25 at the 2 meetings after that. Nothing much has changed on the expectation front as far as the ECB is concerned, but it will be interesting to get an updated view.
Thank you, Elam, for the updates. With continued strength expected for the best performing currency this year, the Mexican peso, Chris Turner says local stories could also be an interesting area to watch regarding the market. Let's hear from Chris.
It's called the dollar bear trend takes a rain check. We're pushing back the period when we expect the dollar to start broadly weakening again. We had expected that in Q2, but it now seems that it's going to be Q3 or later. Now, the reason for the delay in the dollar decline really rests at the Fed and what's going on in the United States economy. We've heard most recently from the Fed Chair Jerome Powell that the Fed might need to take interest rates even higher, 75 to 100 basis points higher into the summer. And in the FX markets, we always look at something called the US yield curve. That's the difference between rates at the long end of the yield curve versus the short end. That's now the most inverted since the early 1980s in America, and typically that environment is pretty positive for the dollar. As you can see in the chart, the dollar typically is quite strong when the US yield curve is very inverted, and that's really key to our dollar story this year. Well, at the same time that the Fed is being very hawkish, so is the ECB. It looks like the ECB is going to do a minimum of another 100 basis points of tightening into the summer again. And just another few words on one of the best performing currencies.
Well, the outlook of a market would be quite interesting if we go straight to the market to see what the outcomes are this morning. Talking about the euro against the US dollar, and then we'll look at Nigeria's states against the majors, the naira, the market. The euro against the US dollar, current price 1.05 US dollar equaling 1 euro. Well, slightly upward, no significant difference in the market, 0.05% appreciation. For the pounds against the US dollar, the pounds have gone slightly back up against yesterday's fall, up to 1.19 US dollar equaling 1 pound, 0.5% appreciation. For the Aussie against the US dollar, slightly downward this morning, no significant difference. But the US dollar against the Chinese yuan, the US dollar is struggling slightly against the Chinese yuan, 6.9 Chinese yuan equaling 1 US dollar, a negative 0.15% decline for the US dollar against the yuan. For the US dollar against the Japanese yen, the US dollar is gaining slightly, current price 136.7 Japanese yen equaling 1 US dollar, upward by 0.43% appreciation. Let's look at the state of the naira, the performance of the naira in the market against the majors. At the international and exchange window, the US dollar had moved to 460 to 1 US dollar equaling 460 naira. It's been a slight gain at the close of yesterday's market, which was at 459.95, but not significant difference in the market. For the euro against the naira, slightly upward this morning, gaining against the naira, 1.35 points gain, a 0.28% appreciation. Current price 486 naira equaling 1 euro. For the pounds against the naira, it's a similar story, gaining by 2 points, a 0.38% appreciation, 546 naira equaling 1 pound. Let's move to the parallel market to see what the outcome is this morning in the parallel market. Buying and selling rates, dollar to naira, 753 naira equaling $1, and selling rate on the average 747 naira equaling $1. For the pounds to the naira, 930 naira equaling 1 pound at the average of buying rates in the black market, and 910 naira equaling 1 pound at the selling rate in the black market. For the euro to the naira, 795 average equaling naira to the euro, and the outlook for the selling rate would be 775 naira to 1 euro. That's the outlook from there. Crypto insights would be next. We get to look at what's happening with cryptocurrencies. Bitcoin faces a challenging macro environment. Bitcoin has lost almost 15% of its value since its 30-day high in mid-February. While the cryptocurrency has suffered from headline risks, can Bitcoin navigate around its current challenges? Well, Jim Laurier will give us the answers to this. Let's hear from Jim.
The Fed funds futures curve to price in the probability for a 50 basis point hike at the March 22nd FOMC meeting to now at almost 75%. That's according to the CME FedWatch tool, which had a 0% probability of that just 5 weeks ago. Now, the next 6 days could add additional volatility to both the dollar and to Bitcoin, as we have unemployment on March 10th and then the CPI and PPI on March 14th and 15th. Now, a reminder that CME Group has recently launched options on both Micro Bitcoin and Micro Ether. We're going to be using the Micro Futures contracts for these examples. Also, these contracts are monthly, so as you get close to the end of the month, you may need to roll your position to the next contract. Now, if a trader believes that Bitcoin could fall from here, they could express.
Thank you, Jim Laurie, for the analysis. Let's go to the market to see what's happening with cryptocurrencies, Bitcoin, Ether, and the rest, the crypto market. The market this morning has shown a pull negativity for Bitcoin. It's crossed the 20,000 mark, hitting $19,807 for one Bitcoin, dropping by 420 point. Market is moving quite fast, a negative 1.86% decline, getting to 2% decline. For Ether, there's a similar story, downward by 33 points this morning, 1,393 US dollar for one Ether, a negative 2.59% decline. Well, we've seen Solana dropping by 4% and Binance dropping by 3%. It's a bloodbath for the crypto market. It will be a good time to look at the stock market, and we'll settle with the Nigerian outlook according to yesterday's market. The equity capitalization in the Nigerian capital market rose to 30.4 trillion naira at the close of trading yesterday. The figure was 0.03% or 11.43 billion naira higher than the 30.39 trillion naira posted by the bourse after 5 hours of trading. Similarly, the all-share index appreciated by 21 basis points to close at 55,822.14 points. Let's look at the top gainers. Transcorp led the gainers list with 11 kobo rise in share price, moving from 1 naira 27 kobo to 1 naira 38 kobo per share. Let's look at the bottom losers. NCR topped the losers table after shedding 29 kobo to drop from 2 naira 92 kobo to 2 naira 63 kobo per share. And the top volume. Transcorp led the day's trading with 179.84 million shares, valued at 239.24 million naira. We call it done on Business 360. My name is Bladden Kim. Thank you for watching.